listening to WNTN 1550 AM and WNTN.com, Boston's hub for international radio and specialty programs.
Well, good morning once again. Kalimera σας, αγαπητοί ακροτές και ακροάτριες, to our audience. It is a Tuesday morning, and as we mentioned earlier, our weekly update, market update with Manny Frangiadakis, pushed out just a half hour, and we welcome both Manny as well as Stamati to market update. Kalimera, gentlemen.
Kalimera.
Kalimera, Manny. It looks like, one day is up, one day is down. Ό,τι βγάλαμε χθες το χάσαμε σήμερα και τούμπαλιν. The opposite is for Nasdaq and Nvidia as it rebounds. It looks like it's more short-term trading than long-term thinking here.
That's right. And I couldn't have said it better myself. So, yeah, look, we've talked about, the second half of this year having some volatility, and we do expect that to continue between now and the election. In terms of, the NASDAQ, a lot of these tech companies, from a valuation standpoint, have grown very quickly. I mean, NVIDIA comes to mind. A couple quarters ago, they were worth $1 trillion. Now they're worth $3 trillion. Their business didn't fundamentally change that much outside of what they, investor base expects in terms of future profits as it relates to their core line of business. But, it's not surprising also to see some profit taking there, given the fact that it's been on an absolutely historic rise. And it's really difficult to make sense of the valuation that it's currently getting priced in at. So I would expect further volatility, especially with NVIDIA and especially with, what is now probably the Fantastic Four and not the Magnificent Seven. We do think that those are at risk at some point of the next year of meaningfully correcting.
And just for everybody's benefit, can you repeat the Fantastic Four?
Yeah, so right now the Fantastic Four would be Microsoft, Apple, NVIDIA, and take your pick between Meta and Amazon.
Okay, it's all in the tech industry. That's what everything is going on. Still, we are on this data-driven, economy. Every week, we're just looking at data. A couple of points about the interest rates. Another Fed governor said that maybe we can raise interest rates in the inflation. So the jury is out. We have no idea what's going to happen.
Look, I think the best way to look at inflation is it cooling from where we were in, call it June of 2022, June of 2023? Absolutely. But to get it to the level that the Federal Reserve is looking for it to be, which is 2% target, is going to be thinning. We're trying to, grab a needle from a haystack here, right? Or, a piece of cloth through a needle. It's going to be very tight, very difficult. And it's going to take quite some time to actually manifest. And if it ever manifests at all, the chances that inflation stays above a 2 to 3% target is not zero, even for years to come. Because as we said a couple years ago, once inflation becomes unanchored, it's very, very difficult to grasp. And the only tool that the Federal Reserve has is to weaken the economy by raising interest rates and trying to increase unemployment. It's exactly what's been taking place for the last 18 months since we started raising rates. So at this point in time, they are trying to remove froth from the economic engine and for prices to be able to stabilize and decrease based off of more supply coming to the market. But that does not seem to be the case. And in fact, we're probably leaning closer towards recession now, given where rates are, than we are towards future growth opportunities. This morning, you had U.S. consumer confidence, which declined and shows a weaker outlook for the economy. And to your point, you had Federal Reserve President Bowman come out this morning and warns of an upside risk to inflation and saying that it's not the right time to cut. So the market started the year pricing in 6 rate cuts. It gave us a lot of the momentum that stocks have been riding on for the last, call it, 7 to 8 months. But we do think that eventually that wind behind the sails will get removed as the expectation for future Fed rate cuts continues to decline.
Yeah, also locally here we had, the famous Akamai company. They just bought for 450 million. They bought it was was a huge deal, 450 million, and obviously it's a discount because it used to be $1 billion company, the API securities, but it shows you that technology companies, they do have the stock and the currency to make those deals, and whatever comes down, will go up, and vice versa. Again, you look at a company was a unicorn. It was over $1 billion. Finally sold for less than a bargain, I would say.
Mm-hmm. Yeah. I'm sure that's not going to be the last story that we hear about valuations coming down. As we started the episode, I think that, when you look at some of these sectors in the market, valuations will get reset sometime within the next, a year. Can't tell you exactly when the volatility comes, but things like NVIDIA that are priced in perfection, and even to make sense of that valuation, that company, to make sense of that valuation, can't pay payroll costs, can't pay taxes, can't pay a dividend, can't pay leases on their real estate. I mean, that's the only way you can make that valuation work right now, as it's priced to infinity and perpetuity. So we do expect that volatility will eventually rear its ugly head. It's very reminiscent of 2000 and Cisco and some of those other companies that had a similar ride back then, about, call it 24 years ago.
Seems like yesterday, though, doesn't it? Well, 24 years ago, the Cisco deal.
And we've got oil peaking up now too. West Texas above $80 a barrel again. That's gonna, make the CPI problem even worse.
Cisco was the largest capitalization company back then. It overpassed Microsoft, and
never came back.
Never came back. And I think what also we have to point out is that 20 years later, Microsoft is still here.
Yes, absolutely. Look, and that's the thing. I mean, if you can be a long-term believer in it and make sense of the valuation, and if you can hang on to positions while volatility is at its absolute worst, then you're going to be just fine, especially if you're aligned with companies like Microsoft. But, if you bought Microsoft in 2000, did you make it through that bear market? And then coming out of 2008, did you make it out of that as well, and to continue to hold on to that position to be here today?
It's a long time. All right, as we what else is in the horizon? We had a great week. Our Boston Celtics. Did you go to the parade? You were in the city. Were you in the city that day, or did you avoid it?
I was working. I was out at meetings and at the office. But it looked like, from the pictures that I saw, it looked like a tremendous parade.
It really did.
Did
Manny,
you make it out today?
No, I avoided it, Manny, to be honest with you. I avoided it. But I watched it on TV, and I saw a lot of green and white. We have joining every single Tuesday, of course, Manny Frangiadakis of 12 Points Wealth Management, a full service firm providing individuals and families with comprehensive management services for their finances. You can call Manny anytime for personal consultation at 617-212-8343. Again, that's 617-212-8343. Gentlemen, have yourselves a fantastic afternoon. Looks like we're into summer swing. And stay safe, and God willing, we'll regroup again next Tuesday at 11 o'clock. Thanks, gentlemen. Nasta kala.
Thanks, guys. Have a great day. Nasta kala. Bye.